Hello, I'm Lelda Smits for the Finance News Network, and joining me from Westpac is its Chief Economist Bill Evans. Bill, welcome back to FNN.
My pleasure to be here, Lola.
The Reserve Bank of Australia has kept Australia's key cash rate on hold at a record low of 2.5% for the 16th straight month. Bill, when are we going to see a change?
Well, while most people are in denial that something could happen as soon as February, I think February would be the best time for the bank to start cutting rates. I don't think there's any doubt that they will cut rates in the first half of this year. It's just a matter of picking the timing. The reason why February is a good time to do it is that in February they also release their statement on monetary policy and they're able to change their forecasts. And so if they have cut rates at their February meeting, they can provide a very detailed explanation as to why that has happened.
So Bill, you say rates are moving lower in February. How much are you expecting the RBA will cut?
In February it would only be by 25 basis points. I think if it was to be more than that, then the governor being concerned about the impact on confidence of a rate cut, if it was more than the expected 25, then that might smack of desperation. He certainly wouldn't want to be doing that.
And what is your forecast for the remainder of the 2015 calendar year?
Oh, look, I think we'll see another cut this year. At the moment I favour March, because I think in the second half of this year things will be starting to look better. The world economy will be starting to look a better place, particularly in China and the US.
So Bill, by the end of this year, where do you see Australia's key cash rate?
Oh, I think it'll still be at 2%. But by the middle of 2016, I think we'll start to see things edging up.
The RBA's Governor Glenn Stevens has recently indicated his preference for the Australian dollar to move to about 75 US cents. Where do you see the dollar headed this year?
Our target is 80 cents, and we adopted that some time ago. I think that the issue around going much lower than that would require more bad news around the world economy, particularly around China and the US starting to run out of steam. I don't really think that will happen.
Now, Australia's unemployment rate rose to 6.3% in November. How do you see the state of our labour market, and where do you see it trending over the following year?
Oh, it'll be trending higher. We expect that it could get as high as 6.75%. The population growth is running at around about 1.8%. That means that you have to be adding about 1.8% in jobs every year, and we're just not doing that.
The mining boom is well and truly fading. How do you expect to see the economy transition? And Bill, which sectors are we likely to see pick up the slack?
Well, we've already started to see some turnaround in the service export sectors. That's education, tourism, financial advice, financial services being exported. That's already started to turn. Of course, we've already seen a huge lift in construction in response to the low interest rates, particularly residential construction. Non-residential construction actually is slowing down at the moment under the weight of very high vacancy rates in the central business districts. Anyone who's servicing the construction cycle, certain manufacturers will be doing well. But the key retail sector has still got a lot of hurdles to overcome.
So Bill, overall, how can we expect Australia's economic performance to look like in 2015? Well,
I think this year it'll be in two halves. I think the first half will be very disappointing. I would be looking at growth pace of around 2.5%. That'll be characterised by interest rate cuts, a weak currency, ongoing weak confidence. But I think coming into the second half of the year, the world economy will be starting to improve. It'll benefit from these very low oil prices. It'll benefit from stimulus packages that are going on in China at the moment. And the US economy is continually gathering momentum. So second half looking better, commodity prices starting to lift, incomes being boosted.
Bill Evans, thank you for your insights and outlook for the year 2015.
Thank you.